So hi everyone, in this video I want to shortly talk about the stop loss. At what point exactly should you put your stop loss? And in this video you can see that right here on the screen we have something that can look tradable for in person. So what we do, when you come and look here, you have the ATR indicator right here. It's called the ATR indicator. So if you don't know where this indicator is coming from, you just have to go into your MetaTrader, either MetaTrader 5 or any session. Then you go to insert. Here, when you go to insert, you can look at indicators. Then you have under oscillators, we have this average true range indicator, is what we call the ATR. Okay, so when you look here, for example, if you want to make a buy order from this candle right here. So for example, I want to make a buy order from this this tracer bottom here. So this tracer bottom shows that the trend is changing from a downtrend into an uptrend. So what that means that we are going to make an entry order around here. So if we are making our order, our buy entry from here, where should we put our stop loss? Okay. So the question is, should we put our stop loss right here or right here? We all don't know because these guys always, they come into to do what we call the stop loss hunt. So to avoid stop loss hunts and then getting frustrated, we shall come, then look around. So when you look around here, you can see that this is going to be your buy entry. Okay. This is going to be your buy entry. So if that is going to be the buy entry level, so we are looking at where to put our stop loss. We shall look at our ATR right here. So this is a current ATR. So this is not the ATR of this candle we are entering at, but this is the current ATR. So right here is reading 0016. So those are 4 decimal places. But when you come here on the price, it has 5 decimal places. So it means that you have to ignore this last digit, this 3 here. So this is 0772. So we are going to multiply our ATR by 1.5. So you get the ATR, value, and then you multiply it by 1.5. Okay, so this is a stop loss. So the stop loss will be equal to that. So stop loss is going to be equal to ATR value times the 1.5. So right here, the ATR value currently is 0016 at the time I'm recording this video. So what we are going to do is to multiply that. And when you multiply this 16 times 1.5, 16 times 1.5, you get 24. So it means that from your buy entry level to where your stop loss is going to be, it is supposed to be 24 pips. So we shall come at 0772 minus 24. Okay, at this value here, right here, it is 0772. We ignore this last digit because our ATR is having a 4 decimal place. So it means this is 0, 1, then 0, those are 2 decimal places, 1, and then 6. Those are 3 decimal places. So even right here, we have to have 4 decimal places, 0772. So we shall have this 72 minus the 24, which is our pips. So it will become 48. So we are going to put our stop loss at 07, then 48. Okay, we are going to put our stop loss at 0748. So from here, where we are buying from, up to 0748, this is 0743, 0748, around here. Okay, so that means that our stop loss for this time, it is going to be here. But I want to argue that it would be wider than this. Just at this level here, the ATR is 16. So let me get the current ATR, Control D. You can see that right here, Control F, the current ATR for this candle was 27. So it means that that is going to be 27 times 1.5. So that is going to be 40 pips away. So you come here and then you move 40 pips away. So that is going to be, this is 07 and then 72 minus 40. So that is going to be at 32. 0732, Control F. from here, this is going to be 0.7 and then 32. 0.7, 32. So this is where our stop loss is supposed to be. Right here. So that is where our support loss is supposed to be. So when you see now right here that the stop loss is wide enough, so we cannot be handed out that easily. So things happen, but still here, because a stop loss right away from here all the way to here. So even if we get a candle like this one, it would not catch us. So when the price goes and then it goes your way, it goes into the money, what we do is we use what we call the trailing stop loss. Okay, so what we do is that we keep on shifting this stop loss right here. If the price now, for example, is overextended, we shall pull this stop loss and put it around here, and then put it around here. So when the price still goes into the money, we still bring our stop loss nearer. It goes into the money, we bring our stop loss nearer, and then it goes into the money, we pull our stop nearer, so that when the price comes back rapidly, it does not affect our account, or we just catch a lot of profits in it. So that is what we call the trading stop loss. Okay, another example, for example, let's first get the ATR. For example, if you want to make a short trade from here, right here, if you want to go a short trade from here, if you want to sell, from there, so if you want to make a sell order, so where should we put our stop loss? So, well, what we are going to do is to first know the ATR value of this entry candle. So this is the entry candle. We have to find out its ATR value. So the ATR value for this candle is 22. So we get that it is 0022, but we're just getting these big random figures, which is 22. So we get this 22 times 1.5. So 22 times 1.5, you get 33. So if you want to put a stop loss, it means that it is supposed to be from this price, you're going to enter from, for example, right here. So for example, right here, you can say that the price is 96 and then is 0969. We are ignoring the last figure because we have to round off to 4 decimal places, because the ATR value is also 4 decimal places. So we have 0969. So we have to get a 69 minus a 33, which we are going to get 36. So we are going to put our stop loss at 09 and then 36. Yes, sorry, we are going to be adding because we are moving upwards, so we are not subtracting. It's going to be 0969 969, and then we add on our value, which was coming from here. This 22 times 1 point, this 22 here, this is the ATR value for this candle right here. It was 22 times 1.5 to get 33. So we have to get the 33 and then add it on the value where we are going to enter from. So we have 09 and then 68 or 69 plus 33. So that becomes at 1.1. So we put our stop loss at 1.1. So this is where our stop loss is going to be, right here. This is where our stop loss is going to be, around there. And then you can see that still the stop loss is wide enough, so we shall not be stopped out that easily. So right here. So once again, if the price goes into the money, you shift this stop loss and then you put it at a break even. Then it goes into the money still, you put your stop loss into the money, you keep on moving your stop loss like that. So for example, now right here, if you had put your stop loss right here, you would have gotten out and then you wait for a new trade. So instead of exiting your trade from here, to be exited from here, and then you catch more pips. So that is how we put our stop losses. So using the ATR indicator. So if you don't use the ATR indicator, and if this is your entry candle here, you would put this is your buy entry. So you look at the next candle. After looking at the next candle, and then you put the stop loss at its at the previous candle, then you put stop loss at its swing high. Okay, so for example, right here we are making a buy trade from here. We have to look at this previous candle. If this is our candle which we are going to buy from, you look at the previous candle and then you put stop loss below its what? Its swing low. But you can say this candle doesn't have a tail which is wide enough. So that's why we have to look for a candle which has a larger tail. So here you can see that all of these ones don't have tails. So this one has a larger tail. So this is where we would have put our stop loss, a few pips away from there. So let us have one more last example and then we close this video. So for example, let me say we are going to make a trade from this level here. So from this bullish engulfing, let me say we want to make a buy entry from this bullish engulfing. We are expecting that the price is going to move away from here, then come up trade there. So what we are going to do around there, we are going to do is to determine where to put our stop loss. So first thing you have to do is to determine the ATR value. After determining the ATR value, we subtract or add it to the ATR depending on the direction. So for example, this is our entry candle, the bullish engulfing. So you can see that the ATR of this candle is 24. Okay, so if the ATR is 24, we get 24 times 1.5. 24 times 1.5, you get 36. So it means that we have to be 36 away. Sorry, 36 pips away from the entry point. So if this is an entry point, then you count 36 pips down. So 36 pips is around there. So this is 36. So you can see when I move this finger, it counts for us the pips. So 36 pips. So around here, 36 pips around here. Control F. So our ATR value is 24 times 1.5. So we have to move. So that is going to become 36. 36 minus this buy level. So we are going to buy from here at 0.567. So 67 minus 36. You get a 31. So we are going to put our stop loss at 0.531. So from here, 0.531 is around here. 0.5, 31, 34, 33. Okay, 31. This is, yeah, 31 is around here. So you can see it is still 36 pips. 36, where you're seeing 36 and then a 3 or 367 right now. At 36, that is 36.7 pips. So you have to put a stop loss 36 pips away. So it means that our stop loss was supposed to be right here. So you can see that it is wide enough, and when the price goes into the money, we put a trailing stop loss until we could be able to break it even. So else if you don't use that ATR and it is disturbing, you just see this is our entry candle. So on the previous candle, which candle has the longest tail? This one. So this is where your stop loss would be, right here. And then you wait to catch the wave up. So for example, right here, if you put your entry from here, you read on the ATR. So if you want to make a short trade from here, you could say that the ATR value of this candle is 28. So you get 28 times 1.5. 28 times 1.5. That is 42 pips away. So you calculate 42 pips away. So your stop loss would be around here. So this is where your stop loss would be. Okay, around there. And then your entry point is here. So you can see that stop loss is wide enough. So as simple as that. So again, if for example we wanted to make a buy trade from here, we just determine the ATR value of this candle we are going to buy from. Okay, we don't use market orders, we use stop orders. So you can see that right here the ATR value is 27. So 27, that is going to be around 41 pips. So we have to calculate 41 pips down the road. So it would be around here, because this is where stop loss is going to be, right here. Or what you could do, you could look at this candle. Okay, we are going to enter from, then look for the candle which has the longest tail, which is this one, and then you put your stop loss below it. So thank you so much for watching this video. I'll see you in the next video. My name is Jordan. Do not forget to subscribe to the channel for more videos like this and for support. Bye bye.